what we've now got available for our clients is what's called a structured note. Think of it as a note with the bank whereby you get paid regular yield or interest. We can actually create a structured note that will protect you against any decline in the underlying portfolio or index within a 0 to 30% minimum. Hey folks, Colin Richards here. Once again, I'm thrilled to be visiting with you on this episode of the Lord and Richards Show. In the past couple of episodes, I've been talking about building a fiscal house. And I've reviewed some of the elements, such as making sure you've got a great foundation. And in past episodes, we've talked about things like having great walls. Foundations are things that are protected, that can provide income, that still grow. And it can also include your cash. But your walls are those investments that make up what we call at Lord & Richards a growing reserve. Those investments that are liquid, that have great access to growth, but need risk management because we need these funds eventually down the road. But then there are also individuals who are qualified investors, qualified purchasers or accredited investors who may have additional opportunities, and I'm going to call that the roof at the top of the house, right? So we got our walls up, we've got our foundation, but how about raising that roof so we have additional opportunities? Whether you're high net worth or not, some of these opportunities that used to only be available to institutions, foundations, large wealth pools, accredited and qualified purchasers can now be done at almost any level. And so I want to introduce you to just a couple of these to understand that at Lord & Richards, we're helping people across all financial spectrum. So whether you're just getting started, you're young, and you've got your future ahead of you, whether you're trying to play catch up on retirement, get retired and stay retired, or whether retirement isn't really the issue, but you want to build wealth, maybe even develop a plan for some really high growth strategies, we're here to help you. Okay, and we do that in the context of a financial independence roadmap. Independence for one person might mean not having to go to work. For another person, it might mean the freedom to do some really amazing things financially. At Lord & Richards, we talk about faith, family, finance, and fitness. And financial capability underpins faith, family, and fitness because the more dollars you have, the more you can do for your faith, the more you can do with and for your family, and the more you can do for your personal health. You can get access to some great tools, and we've got episodes out there where we've talked about some of those tools. New research, new therapies such as stem cell therapies, new diagnostics that are pretty expensive, but with financial independence, you can get access to. Well, what are the tools that are available? Well, I'm going to give you a quick sampling. Most of us are familiar with investing in public equity, right? We can buy an individual stock in a company like Coca-Cola or Apple, or we can buy a mutual fund that contains a lot of different companies, or track an exchange-traded fund, a kind of a low-cost version of a mutual fund, or get into an index fund. All of these give you access to ownership of a public company. Right? Now, you're limited in what you can do, but it is public ownership. Well, there's also opportunity to get involved in private equity. Now, this is a big field, and so I'm going to be real general, but I'm going to identify that Lord & Richards can help you if you have a desire to be involved in private equity. Once again, different options are for accredited investors. What is that kind of investor? Well, that's an individual with $1 million net worth, excluding their home. Or it's a family. And it can include also people who have income in excess of $200,000 as individuals or $300,000 as a couple. And it can include certain people who hold professional positions or designations like investment advisors such as myself. So private equity gets you access to a world of opportunity. I will warn you, private equity generally costs more to get in the club, right? It's kind of like going into the VIP club. I love how airlines do this, right? Everybody's special, so therefore nobody really is. But private equity is really a whole other level. And if you want to get involved in some advanced growth strategies that will give you another level of ownership in the opportunities that are out there, you should be asking us about private equity. There's also private credit, right? Lending, or private debt, you can call it either side, But private credit's going to give you access to the ability to lend in a different market. Normally, public debt we call bonds, right? You're going to help AT&T raise money, so they're going to sell a bond, and they'll pay you an interest rate for as long as you hold that bond. Well, private credit gives the opportunity to potentially earn a significantly greater return because these are the places many companies are going to turn to when they need to raise large volumes of cash, and they're not going to do it on the public market. So private credit can get you into some pretty high investment returns. In addition, institutional level real estate access. We have many ways to do this. One of my favorites is an interval fund that allows you to get into a specific group of people that's investing in a large volume of real estate and reduces the volatility by only allowing folks to get in and out at certain times throughout the year, usually quarterly. And then finally, one that I'm really excited about, and I'm just going to touch on today, maybe we'll go into more depth, is the structured note. Now, these notes are offered by some banks that you're very familiar with, JP Morgan, Morgan Stanley, Bank of America. There's some foreign banks like BNP Paribas and RBC, but these are highly rated institutions with key senior level notes and contacts that we have. And what we've now got available for our clients, we haven't even announced this yet at a client event, is what's called a structured note. Think of it as a note with the bank whereby you get paid regular yield or interest. Let's take one example. Let's say you're moderate and you're comfortable with moderate income, such as 5 to 8%. That's pretty good income. Well, we can actually create a structured note or buy structured notes that will protect you against any decline in the underlying portfolio or index within a 0 to 30% minimum. And so as long as you're within that range, you will not experience that underlying decline. In addition, if you do pierce that, you only experience that at the very end of the note. Meanwhile, any month that you're at or above the value or within the target range, you're going to get paid your 5 to 8% interest. You can also be much more aggressive and target a minimum of 20%. So as long as the index doesn't go down more than 20%, you're good. And that really covers a lot. And you will not experience any loss until the very end, only if the index is down at the end. But meanwhile, you'll continue to take an even higher range, possibly 6 to 9% income without all of the volatility. So this is a new option for our clients. We'll go into greater detail in the future, but I'm excited to tell you ways that you, whether high net worth, accredited, or qualified, can get access to ways you can raise the roof on your growth potential. This is all part of what we do every day at Lord & Richards for our clients, bringing new opportunities within the context of a financial independence roadmap. I would love to talk to you. I'd love to help you achieve financial independence. It just takes a call.